We have this thing with gold exposure, not much more than 1%, if that. I mean, that's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted is going into a death cross, while at the same time, gold is, it's found support at its 55-day moving average, and it's knocking on new high ground. I mean, it's fascinating how the buyers are in there at $2,500, and they try and cap it at 2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly.
Gold prices have continued to soar in 2024, driven by a combination of factors, including escalating geopolitical risks, concerns over interest rates, budget deficits, inflation hedging, and robust central bank buying. The precious metals' impressive rally this year was initially fueled by expectations that the Federal Reserve, Fed, would implement up to 3 interest rate cuts in 2024 as persistent inflation began to ease. Traditionally, a weaker US dollar and lower interest rates make non-yielding assets like gold more attractive. Yet, since early 2022, a significant decoupling has occurred, with gold's relationship to US real yields weakening even further in 2024. This breakdown indicates that gold's recent strength may be driven more by factors like geopolitical instability and central bank demand than by the usual financial metrics. In a July 2024 Insights report, Gregory Shearer, head of base and precious metals strategy at JP Morgan, noted that there is much more at play with the recent rise in gold prices, adding that the banking giant remains fundamentally bullish on gold prices in 2024 and beyond. Amid fraying geopolitics, increased sanctioning and de-dollarization, we observe an increased appetite to buy real assets including gold, Shearer said. Across all metals, we have the highest conviction on a bullish medium-term forecast for both gold and silver over the course of 2024 and into the first half of 2025, though timing and entry will continue to be critical, he added. Popular precious metals analyst, former stockbroker, and head of research at Gold Money Alasdair MacLeod has even higher expectations for gold and silver prices in the coming months and years. In a recent interview with Liberty and Finance, Alasdair discussed the recent increases in gold prices and an impending explosion of the entire global financial system, leading to even more bullish rises in gold and silver prices. According to the renowned analyst, this is the golden era for both gold and silver, and every factor indicates significantly higher prices for both in 2025. We will present clips from Alasdair MacLeod's interview with Liberty and Finance. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
I've always maintained it's not a question of gold going up, it's a question of paper currencies going down. And that continues to be the background to it. But there are other factors. You've got a very, very strong savings, it's the word I'm looking for, savings ethos, if you like, in China, where households put aside on average something like 35% of their income. I mean, that's huge, $6 trillion. And you've got to think where that's going to go. It can't go into foreign currencies if they wanted to. Property markets shut off. It's going into bank accounts. The same banks who, by regulation, are required to offer gold accounts to their customers. I mean, there's a minimum amount you put in, but the minimum amount is less than $100. I would expect to see more and more of those gold accounts, just accumulating. And the banks which run them, these are not allocated accounts by any stretch of the imagination. They're unallocated accounts. But it does mean that the banks that offer them have got to have some decent gold cover. So they're in the market getting what they can. So that's keeping things short. Central banks understand what we're talking about. They won't admit it, but they do understand what we're talking about. And they want to get out of dollars and get into gold, because they know that gold is money and dollars are credit. And what's happening to credit? The value of that credit is bound up in the faith, if you like, of and trust in the US government. what's happening to that trust? I mean, that answers the question, the relationship between credit and money. On top of that, I think that the situation, if you like, of investing institutions in financial markets is very, very interesting. When I first became a stockbroker, it was normal to have an exposure of roughly 10% to 15% of your assets in gold or gold proxies, I mean mining shares or something like that. This was the protection, if you like. And indeed, if you go back to the 30s, they would say that a gentleman's portfolio was comprised of gilts and gold. No equities in there at all. Now, we've moved away from that. And I think that the average exposure, if you take the entire investment management industry, exposure to gold is probably not much more than 1%. So in other words, they haven't bought it. As things develop, you've got this huge, great valuation disparity between the S&P and bond yields. That, I think, in a recession is going to close. And it's not going to close by bond yields falling. It's going to close by equity prices falling. And we're seeing sort of a few shaky things happening recently. I mean, the S&P is basically sort of 5 or 6 or 7 tech stocks led by NVIDIA. NVIDIA had a bit of a rocky time last night declaring their results, and the stock got hit pretty badly. I haven't seen how it's trading today. But you can see that the sort of cracks, if you like, in this sort of high-tech, you sort of huge, great corporations at the top of the S&P, their valuations are stalling, let's put it that way. Now, when that goes into reverse, what does a fund manager do? Well, he's going to sort of start thinking, he might sort of think it's a good idea to buy gold.
JP Morgan researchers forecast that gold prices will reach new all-time highs of $2,600 in the coming months. Their forecasts were much more conservative at the beginning of the year, before the metal's impressive run. But gold's performance in 2024 has been anything but conservative. Alasdair expects the trend to continue for the rest of 2024 and pick up sharply after the Federal Reserve and other central banks start cutting rates and resume quantitative easing in 2025. This, coupled with heightened geopolitical tensions around the world, makes it a certainty for Alasdair that 2025 will be an even greater year for gold and silver prices than 2024. He predicts an increase in institutional demand for gold and silver from less than 1% currently to at least 4%, a quadrupling of demand followed by a quadrupling of prices for both metals. Let's get back to the interview.
We have this thing with gold exposure, not much more than 1%, if that. That's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted is going into a death cross, while at the same time, gold is, it's found support at its 55-day moving average, and it's knocking on new high ground. It's fascinating how the buyers are in there at $2,500, and they try and cap it at 2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly. We are on the cusp of something, I think, very, very interesting as far as gold as a whole is concerned. Now, as far as silver is concerned, that is also very interesting, but for rather different reasons. There was, various people picked up on a story that Samsung have got a new solid-state battery which uses silver and not that very, very dangerous lithium. It's got the range, it's not so heavy. It's got everything to recommend it. Rapid charging, it's just incredible. You can get something like 600 miles and 10 minutes charge. Whatever the figures are. That makes the whole of the EV thing sensible. But there isn't the infrastructure to cover those huge charging currents. That's going to take time to put in. But nonetheless, China will copy Samsung. They will have the same technology very, very rapidly. They will put in the infrastructure, and we'll be finding that these Chinese cars, even with a 100% tariff, are fiercely competitive compared with anything coming out of anywhere else. This is the reality of the situation. It's going to mean that silver, which has been in supply deficit for the last 4 years, according to the Silver Institute, silver has got the potential, really, I think, to easily double from here. Whether it does or not, we'll see. But you can see that with a rising gold price, silver is likely to rise very rapidly as well. And I think the gold-silver ratio will fall from current, 83, 84, whatever it is, easily down to below 60 on what is developing, a mixture of the monetary situation with the collapse in credit and, physical demand for silver, mainly from Asia, which is where all the action is.
If all goes as expected in 2025 and gold prices quadruple, Alasdair expects an even more violent explosion in silver prices, with the cheaper metal projected to finally hit the coveted triple digits. At $10,000 gold price per ounce and a reduction of the gold-silver ratio from 80 to around 60, an ounce of silver will be trading at around $166. Of course, in this type of environment, inflation will be through the roof. Investors will have lost even more confidence in the US government, and the entire financial system will be completely unrecognizable. Do you agree that gold and silver prices will take off sharply within the next 12 to 18 months? Please share your thoughts on Alasdair MacLeod's predictions for gold and silver in 2024 and 2025. If you liked this video, don't forget to check out our other videos on gold and silver prices, smash the like button, and subscribe to the channel for more videos like this. Thanks for watching.